What's up, folks? It's Eric from Option Edge, and in today's video, I want to talk about when you want to trade Iron Condors and when you do not want to trade them. And I got some data to back it up. Let's go. So today I want to show you in this quick video when to trade Iron Condors and when not to. So right now I have my backtesting software, Trade Machine Pro, so I can look at historical data and test out different strategies and see what would have won and what would have lost. So I have this set to Iron Condor, and I have the my strikes of the Iron Condor. We want our short strikes 20 deltas and our long strikes 10 deltas. So we have a out of the money Iron Condor set up here. And what I have here is the Dow Jones 30, which consists of these stocks here, as you can see. Okay, so I set the contract length to be 45 days till expiration. And then in addition to that, I have some closing criteria. So you close this strategy when it hits a 50% gain or more. And then in addition to that, we're going to close out this strategy no matter what after 15 trading days or about 3 weeks. Just know that the data shows that these parameters are optimal for selling options, more or less. And then the time period I have is set to 5 years. So this is a 5-year back test looking at all the trades over the last 5 years. So here are the results here. I'm looking at the Dow Jones as a portfolio. I'm not looking at any individual trades. You can see each trade averaged almost a 1% gain, but overall the total return for all of these trades was negative 6,000. So that's pretty abysmal. And it seems in many cases that just putting on an Iron Condor is just a terrible strategy. So what is one tweak or one opening criteria we could add? So I'm going to go into my technical open, and we're going to add a higher VIX. Okay, so VIX is a measure of the volatility of the S&P 500, basically. So we want to see what's going to happen to our win percentage and our earnings if the VIX is above 23. And for reference, right now the VIX is at 19. This is right around 23, so not too many instances. I mean, a decent amount of instances over 23, a VIX above 23. So let's go back to the back test. All right, so we added our VIX parameter of a VIX above 23, and you can see that the results are much different. Our average trade percentage is almost double than what it was, and instead of having a negative return, we have a very large positive return here. And then in addition to that, I can organize these in ascending order or descending order, whatever way you like, to see which trades did the best in this situation. So we have Procter & Gamble, UNH, and whatnot. So that's it. Trading Iron Condors when the VIX is low is asking for trouble. So if volatility expands, you're going to be on the wrong side of that trade. So better off to put a Iron Condor on when volatility has already expanded. That is not a recommendation, a trade recommendation. That's just for learning purposes only. So that's all I want to share today. Hope that helps. Peace out, guys.